You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 2nd day of October, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those taking our 1-week free trial. If you've not yet taken our 1-week free trial, when Michael joins us in about an hour, he'll walk you through it step by step. We'll get your indicators up and indicating today, and your trial will run all the way through next Friday. So no credit card required. We want you to focus on what's being taught and everything we offer, so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for the afternoon broadcast. This broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. Best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What'll happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. There will be days, of course, that you're busy, out of the office, away from your desktop, can't join live from your desktop, but wherever you are, you would like to join live. Or if you're busy and can't join live, you'll want to catch up later. You can do all of that from our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. You don't have to remember all that, though. Just youtube.com/CFRN. Let me turn off this noisemaker in the background. Let me find which one's making that noise. That one stopped. That one stopped. They all seem to be stopped, so why would they still be going off? Stopped. Stop. Stop. And stopped. Well, isn't that odd? All right. Well, if you hear the noise going off in the background, at least you know what it is. All right. This is our schedule for each afternoon broadcast. Michael will join us about 1 p.m. Eastern, top of the hour, for a recap of what happened today in the live training room and do a little live trading on the TradingView platform. We'll start where we always do with our daily devotional. The topic we're on right now is context matters. Today's scripture is John 37 and verse 38. On the last and greatest day of the festival, Jesus stood and said in a loud voice, "Let anyone who is thirsty come to me and drink. Whoever believes in me, as Scripture has said, rivers of living water will flow from within them." Again, John 7, verses 37 through 38. Now, in this scripture, in John 37 through 38, Jesus loudly proclaimed, "Let anyone who is thirsty come to me and drink. Whoever believes in me, as Scripture has said, rivers of living water will flow from within them." To modern readers, this comment seems to come out of nowhere. Why is Jesus suddenly talking about water? Understanding the first century Jewish background, however, helps us put this story in context. John notes in his gospel that Jesus said this on the last and greatest day of the festival. This festival was the Jewish Feast of Tabernacles, or booths, one of the 3 pilgrimage festivals where Jews were to travel to Jerusalem to commemorate Israel's years of wandering in the wilderness by living in temporary shelters for 7 days. Each day of the festival, the priest would bring water from the pool of Siloam and pour it at the temple to memorialize God's provision of water from the rock in the wilderness. On the final day of the festival, the day of Jesus' proclamation, they would read from Ezekiel 47 and Zechariah 14. In Ezekiel 47, the prophet has a vision in which water flows from the temple and provides life throughout the world. Zechariah 14 speaks of a coming day of the Lord, when living waters shall flow out from Jerusalem. It's in this setting that Jesus makes his statement, declaring himself to be the source of life-giving water and putting himself as the foundation of God's new temple. The people's reactions show us that they understood the implications of Jesus' statement. Some recognized him as the Messiah or a prophet, while others, well, they wanted him arrested. And we know how that ends. Let's pray. Lord Jesus, thank you for the promise that if we are thirsty, we can come to you and drink. Fill us with your living waters until rivers of life flow out of us. Quench our deepest needs with your Spirit, and let your love overflow through us to others. In Jesus' name we believe and pray. And everybody said, Amen. I forgot to turn. I don't want to turn it off forever, but I stopped it manually. Oh well. All right. Just know it'll make a little noise every now and then. So everybody said amen. And happy Thursday. Thursday means members only workshop tonight, 8 p.m. Eastern. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 70 points. NASDAQ is up 48. S&P 500 is down 6. The Russell 2000 is up 1.5 points. I suspect we're going to see them all in the red here pretty quick. They're divided now, but look out. In the commodity basket, crude oil down again today. 94 cents. Trading 60.84 last. That's a drop of 1.5%. Gold down $44. Trading 38.53 last. That's a drop of well over 1%. Silver down $1.74. Trading 45.94 last. It's a drop of almost 4%. The Asian markets at the close. The Nikkei posted a gain of 385 points. Shanghai rose 20. The Hang Seng gained 431. That's over 1.5%. And in the European markets at the close, FTSE down 18. The DAX up 324. Now for the DAX, that's a gain of almost 1.5%. And the CAC up 89. That's almost 1.25%. So we had a green day in Asia. It was a mixed day for the UK. And as we mentioned already, it is a mixed Radio Thursday here in the US of A. Russell is positive now by less than a point. Now it's just over a point. So I think you get the idea. All right, turning to the news. The White House published an executive order yesterday declaring any armed attack against Qatar. Now, you may pronounce that Qatar, but I know someone who lived there, and they said it really is pronounced Qatar by the locals. Any armed attack against Qatar will be considered a threat to the United States. President Trump pledged to use all necessary means, including the military, to defend the energy-rich nation, marking an unprecedented arrangement between the U.S. and an Arab state. The order, dated Monday, follows Israeli airstrikes 3 weeks ago targeting Hamas leaders in Qatar's capital, Doha. While Israeli Prime Minister Benjamin Netanyahu initially defended the strikes, he apologized to Qatar on a call Monday, coordinated by Trump. Earlier this year, Trump announced at least $1.2 trillion in economic commitments with Qatar, which has been a major non-NATO ally since 2022. Preparations are also underway for a Qatari jet to be refitted as Air Force One. While this week's order resembles NATO security guarantees, it is not legally binding without Senate approval. That means Trump can choose how and whether the U.S. responds. Saudi Arabia, which has long sought and failed to secure security assurances from the U.S., signed a mutual defense pact with Pakistan last month. And on a sad note, Jane Goodall has passed at age 91. The famed conservationist and primatologist was known for her groundbreaking research on chimpanzees and environmental advocacy. In 1957, Goodall traveled from England to Nairobi, Kenya, where she worked as a secretary to paleoanthropologist Louis Leakey. Despite her lack of formal training, Leakey recruited Goodall to launch the first long-term study of wild chimpanzees in an effort to better understand human evolution. The animals had been studied for decades in captivity, but never in their natural habitat. Goodall's first groundbreaking observation came when she witnessed chimpanzees use a grass blade to fish for termites, upending the prevailing belief that only humans could make and use tools. Goodall would go on to observe the animals hunting, forming social bonds, displaying emotion, adopting other chimpanzees, and even engaging in war. Goodall parlayed her research into an appeal for conservation. She will be missed. And why would I even want to share this? I don't know, but it's in the news. Taylor Swift, releasing her 12th studio album tonight at midnight. The Life of a Showgirl is slated to include 12 songs. Swift is Spotify's most streamed artist and one of the best-selling musicians of all time, with over 200 million records sold worldwide. Best-selling musician of all time. We're talking Elvis, all of them. The Swifties. Her 2023-24 Eras Tour grossed over $1 billion, the highest grossing music tour in history. The 14-time Grammy-winning artist is also the first and only person to have won 4 Album of the Year awards. She holds 80 records in all, according to the Guinness Book of World Records, including the greatest seismic activity caused by a music concert, equivalent to a 2.3 magnitude earthquake for her July 22nd and 23rd Seattle show back in 2023. The album will be accompanied by an AMC Theaters release. The 89-minute, the official release party of a Showgirl, includes a music video, screening, and behind-the-scenes footage, and is expected to gross $35 to $40 million. Go Taylor. Tesla reported blowout third quarter global deliveries. as the expiration of the $7,500 federal tax credit in the U.S. likely juiced sales. Tesla said Q3 deliveries came in at $497,000, easily topping Bloomberg consensus estimates of around $439,800 and the 462,890 units delivered a year ago. Tesla said Q3's total was a new quarterly record for the company. Tesla stock was up in pre-market trade but rolled over and dipped into the red at the open. Currently, it's down almost $12 a share. Yep, $12, a little over $12 a share, or a little over 2.5%. President Trump is weighing slashing thousands of federal jobs ahead of a meeting with his budget director, Russell Vought, as the White House looks to ratchet up pressure on Democrats to end a government shutdown that has entered its second day. It's likely going to be in the thousands. White House Press Secretary Carolyn Leavitt told reporters on Thursday, saying that the entire team at the White House was working to identify possible cuts. She said, "We're going to look at agencies that don't align with the administration's values, that we feel are a waste of the taxpayer dollar." Leavitt's comments came after Trump on social media earlier Thursday said he planned to meet with Vought to determine which of the many Democrat agencies, most of which are a political scam, he recommends to be cut, and whether or not those cuts will be temporary or permanent. And Eli Lilly was asked to produce more insulin. Pfizer was asked to produce more of its top-selling cancer drug, Ibrance, and its cholesterol drug, Lipitor, and London-based AstraZeneca to consider a new headquarters in the U.S., according to two sources. Pharmaceutical executives are getting nearly daily calls from staff at the White House, including Chief of Staff Susie Wiles, and senior figures at agencies like Health and Human Services and the Commerce Department. Pharmaceutical companies are the tip of the iceberg. Trump administration is pursuing deals across up to 30 industries involving dozens of companies deemed critical to national or economic security, according to more than a half dozen people familiar with the talks. And OpenAI has completed their private share sale. OpenAI has completed a deal to help employees sell shares in the company at a $500 billion valuation, propelling the ChatGPT owner past Elon Musk's SpaceX to become the world's largest startup. Current and former OpenAI employees sold about $6.6 billion of stock to investors, including Thrive Capital, SoftBank Group, Dragoneer Investment, and Abu Dhabi's MGX and T. Rowe Price, that boosted the U.S. company's price tag well past its previous $300 billion level during a SoftBank-led financing round earlier this year. AI is everywhere you look. Now, this one may take you by surprise. Signs of caution are emerging around high-flying tech shares, but that's just making it cheaper to use options to bet on further gains in the stocks. This is from Bank of America's derivative strategists. After scooping up tech shares for months, hedge funds dumped the group last week at the fastest pace since early August while piling into value sectors like banks, according to Goldman Sachs trading desk. In options, traders aren't positioning for big gains in the tech sector looking 6 months ahead. If a 45% rally in tech stocks since early April looks like a bubble, it probably won't burst anytime soon, says Bank of America derivative strategist. They advise investors to play it through a 6-month call spread on the Invesco QQQ Trust Series 1 ETF. The QQQs, or the triple Qs as they're called. Buying it now would yield profits of 7 times the price paid should the group advance at least 9.4% by late March. When looking at today's price action from a distributional lens and within the context of the behavior of asset bubbles over the past century, we will see further room for a potential AI bubble to inflate. B of A derivative strategist said buying out of the money triple Q call spreads with a slightly longer 6-month tenor can provide an attractive cost-benefit proposition. The options team's recommendation echoes that of the bank's equity strategist. B of A's Michael Hartnett studied 10 equity bubbles since the start of the previous century and found that these periods of extreme owner valuation produced average trough-to-peak gains of 244%. After rising around 223% from their March 2023 low, the Magnificent Seven cohort has more room to go. The bank strategist wrote this in a note last month. The Bloomberg Magnificent 7 Index traded 0.3% higher as of 10:08 a.m. this morning in New York and is currently up about $1.32 a share. And last, from Wall Street, Scott Bessent sees a big breakthrough coming. China. Really? Treasury Secretary Scott Bessent predicted a pretty big breakthrough in the next round of trade talks with China, even as the Trump administration takes steps to support American farmers hurt by a decline in Chinese purchases. The most important thing we're going to see is a pull-aside meeting of Presidents Donald Trump and the Chinese president at a regional summit in South Korea scheduled for late October. Bessent added that his own parallel trade talks with Vice Premier He Lifeng, which would be our 5th round of talks, should show a pretty big breakthrough. Purchase of agriculture products, and particularly soybeans, have emerged as a key point of contention between the world's 2 largest economies. Earlier this year, China used its dominance of vital rare earths to help force Trump into easing export controls on certain goods to China. That came on the heels of an agreement to reduce the punitively high tariffs that both sides had levied on each other. Beijing has turned to soybeans as leverage, just as the harvest is coming in. While last year, China, the world's largest buyer, sourced a 5th of its imports from the U.S., it hasn't bought a single soybean cargo from the current harvest. Bessent called this year's yield so big, we may run out of storage. It's unfortunate Chinese leadership has decided to use the American farmers, soybean farmers in particular, as a hostage or pawn in the trade negotiations. That's from Scott Bessent. The upcoming negotiations will occur before the scheduled November 10th expiration of a truce on the highest tariff levels from earlier this year. And there we have it. All the news that's fit to read from Wall Street. Logic 247. It's our 24/7 around-the-clock Emini alert service. We're currently in week 374. Over the last 374 weeks, we've issued over 20,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a very simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:15 a.m. Eastern. So some of these numbers may have changed since then. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 51 alerts. At the time she did the recap, we were still waiting on the outcome of 10. That gave us 41 actionable alerts, of which 2 or 5% would have been stopped out based on simple market structure and the simple process we teach all of our passport holders. Every logic alert has an entry price, long or short, an initial target designed to help you get your goal for the day, and then additional targets in most cases, and a final trade to target. The logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. The real purpose of the logic alerts is to help you learn how to read a chart. If you're going to learn how to trade, first you got to learn how to read a chart. Now, 374 weeks, a little over 7 years, that's a very long time. But years before, there was a Logic 247. We had our original alert service, the concierge trade alerts. And they're different in quite a few ways. But for the purpose of this discussion, they don't come out around the clock. They're published 5 minutes ahead of the Globex Open each evening. So the Thursday session that we're in right now began last night at 6 p.m. Eastern. It will end today at 5 p.m. Eastern. And the Friday session will begin tonight at 6 p.m. Eastern. All of our traders had all of these targets 5 minutes before the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go have a look at them. We'll start with the bellwether, the S&P 500 E-mini futures. New all-time historic high, 67.82 and a quarter. I was only able to get this up to 81 and a quarter, so that's off by 1 point, 4 ticks. The actual high, new all-time historic intraday high. Now, yesterday we got a new all-time historic closing high. So there's a difference between a intraday high and a closing high. The greater importance is on the closing high. But price, you see, yesterday we closed off the high of the day, but it still gave us a new all-time closing high. 67.57, 67.49. Yep. Where we closed today, well, we're back to that doji. We got blue and climbing below us as support, and the high of the day overhead as resistance. If we break today's high, then the 100% fib extension is up at 68.07. Call it 68.08. Now, price always reverts to the mean. In our case, the mean is green. We call it the BBC. Just stands for bull bear cross. When price crosses below the green line, We're bearish and expect lower prices. When price crosses above the green line, as it did on April 24th, we become bullish and expect higher prices. And every time price reverted to the mean, the pullback held, and the pullback held, the pullback held, and the pullback held, the pullback held, and it held. Question is it always reverts to the mean, so it's not a question of is it going to pull back again. Oh, it will. There's no doubt about that. Question is will it hold? Because we know from many years of experience that price always reverts to the mean. Doesn't matter what methodology, strategy you use. So we got a little doji sitting up here above blue and climbing. We know where resistance is. We know where support times 2, really. Blue and climbing, that's potential, the low of the day. Potential support, which is basically right at blue and climbing, potential support, then the step line, then yesterday's low, and then the low, nope, and then the daily BBC. It's right there. Now, this is all happening in a world where the most powerful nation on the planet has gone out of business. Our government has shut down. And we put in a new it shut down yesterday. We put in a new all-time historic intraday and closing high. Day 2 of the shutdown, we move even higher. Now, if you're scratching your head going, this doesn't make sense, you would be correct. It does not. But none of us controls what the markets do. All we can do is trade what's in front of us. Now, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just a time frame I chose years ago. And they say if it's not broke, leave it alone. So I did. The vertical lines you see here separate today, Thursday. Here's Wednesday. Here's Tuesday. The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern for the last 15 and a half years. This was when price rallies up to a weekly zone, we expect resistance. When price drops to a zone, we expect support until proven otherwise. See here we punched through a little bit and then we retraced, came back, found support, and then took that zone out and then found support at this zone. One of 3 things happens when price encounters a weekly zone. As you can see, I used the DT Pro charts, not the TradingView charts. Consolidation at the zone, consolidation at the zone. That's what happens 70% of the time. 20% of the time, rejection. 10% of the time, the slice. So this was the opening candle right here last night. Okay, right where the crosshair is. And remember, these targets, all of our traders had these targets 5 minutes before the market opened. So the market opened at 6 p.m. Eastern, and we hit the long target at 9 o'clock. So it took 3 hours. We opened at 67.57 and ran up 13 points to the target. Only takes 2 points to get your goal for the day. Then we had a retracement that didn't quite make it all the way back to the BBC. So we run up, we hit the long target again, consolidate, then we get a retracement that does touch the BVC. Then we put in that all-time historic high. Now that was off the 9 o'clock candle this morning. Here's the 9:30 opening candle on Wall Street. And that's where it started. Okay. This low right here. Okay. See this area right here where the step line crossed to the right side of blue and climbing? That's an important price, important area. Now the low of this candle, this green candle right here, okay, that would be these tops and this low. Okay, that's just called market structure. Now we've consolidated sideways for 1, 2, 3, 4 30-minute candles, 2 hours. If we continue to consolidate sideways, the black step line, you can see it's already hooking to the right. Once that thing crosses red and falling, then we should see a retracement back to the BVC. Price always reverts to the mean. And as you can see, the pullback holds more often than it doesn't. But eventually it will trade through. Okay. In a situation like this where you got a lot of blue and climbing chasing price, those are the times when you can sort of expect or look here. See the step line cross blue and climbing. That tells us we're going to see a pullback to the BBC. But with all this red and falling, that's when price is most likely to trade through. Pullback holds more often than not, but eventually it will trade through. That's all you got to remember. And so, if price gets above the step line or gets above red and falling, and the step line crosses to the right side, we should see a retracement to the BBC. Now, right above that BBC, you've got a bearish cross, which is potential resistance. So we could see price spike and find resistance right there. Okay. All right, the Dow. Here's where we opened last night. We consolidated sideways. And at 9 o'clock, just like on the ES, we reached up, but we came a little shy of actually touching the target. We missed it by 3 ticks or points. The Dow does points, it doesn't have ticks. It's the oddball. But this candle opened at 733 and ran up to 767. So you only need 20 points to get your goal for the day. Then we consolidated along the weekly trading zone. Remember, that's what happens 70% of the time. And then this is the 9:30 open on Wall Street for the Dow. We ran up, and then at 10 o'clock, we came down hard, all the way to the short target, to the tick. And that short target was based off this right here. See this consolidation? See the flat line across there? We hit it, and we bounced all the way back to the BVC. Price always reverts to the mean, and so far the pullback has held. So we should look for another leg to the downside. On the Russell, here's where we opened last night. And at 9 o'clock, we hit the long target, 2465. When the market finds resistance, it's going to go look for support. The pullback held. It sent us up through the long target all the way to the zone overhead, 2649/50. We consolidated at the zone, blue and climbing turned to red and falling, and then price fell. This was the 10 o'clock candle right here. The low of that candle, 24.48.5. So we missed it by 2 ticks. Now you only need 2 points to get your goal for the day. So if you come in at 49 down to 50, I mean the candle started way up here. Okay. Now, once it got to this area of support, look at the bounce it took. And consolidation, now it's trying to reach back up to the BBC. On the NQ, here's the open last night. All right, so we pushed through the NQ. This was the opening candle. And on the NQ, by 8 p.m. Eastern, we had hit the long target. We continued higher. Ran out of steam right here. 9 o'clock this morning. This was the 9:30 opening candle on Wall Street, this big red candle that came right back down to the top of the long target. And as you can see, the step line is attempting to cross red and falling. That happens, we may not see price drop any further. If we do, watch this area for support. Here we basically have a double bottom right here. Okay. Now if we take out this, we'll probably head all the way down to the short target. Crude oil still falling. We're now below this week's lowest weekly trading zone. 60.90/95. This was the open last night. We did run up at 8 o'clock. Tagged the long target. And this area right here, this bearish cross, that should have been good resistance, but it spiked a little bit higher up to the top of this candle. Okay. But quickly retraced. The pullback to the BBC held, and it sent it right up to the long target, to the tick, which was based off that high right there from yesterday. Then blue and climbing turned to red and falling, and we dropped to the short target. We consolidate, and now we find ourselves below the lowest weekly trading zone. However, based on 15.5 years of history, by close of business tomorrow, we expect price to be at or above the lowest weekly zone. What if it doesn't? No, it doesn't. Has that ever happened before? It has, but only a few times. A couple of handfuls over a long time. All right, opening candle last night on gold. We're below the BBC, so we're expecting lower prices, and we hit the short target by 9 o'clock. 9 o'clock was the big hour. We found support, and we get above the BBC, Red and falling turns to blue and climbing. All systems go. And we hit the long target by 6 a.m. this morning. Then we get up to the highest weekly trading zone, 3916/17, just like we did yesterday. But now we've seen a pretty substantial sell-off. The step line is trying to cross red and falling from the left side to the right side. If so, we should get a retracement back to the VBC. Pullback holds more often than not, but if it trades through it, then this bearish cross right here, that is most likely the first time up. If price gets there, good resistance. Silver. Here's where we open, and we drop to the short target and consolidated at the zone. Support will always send the market looking for resistance, which we found at the long target. Sent us back to the BBC support, which sent us back to the zone resistance. And there's still one more weekly zone above on silver. And then a pretty wild drop from 48 bucks down to 46 bucks. $2 drop. Now it looks like the step line's trying to cross red and falling. If it does, look for a retracement back to the BBC. And again, if the pullback holds, we'll get another leg to the downside. If the pullback doesn't hold, right above, right here, first you've got the zone and the underside of the short target, and then you got this bearish cross. Okay, so that covers all the markets in granular detail, and on the daily we still have that doji. So market's not showing a lot of confidence. Again, in a world where the most powerful nation on the planet is officially shut down, out of business. I mean, we all woke up today. We're all going through whatever motions we go through every day. Kind of a normal day, but everyone's shut down. Now, what's interesting is on the 15th, politicians, 15th of the month, politicians will get paid. The military won't. Huh. Think about that. How fair is that? Now, the government employees, some of them won't get paid. If they're furloughed, they'll get paid when they come back, when all the dust settles. Anyway, it's a mess, for what it's worth. All right, Michael will be joining us here in just a few minutes. So we'll leave the daily chart up here. I got to take care of something real quick. So stand by, don't go away. Mike will be here momentarily.
Okay, I am ready. Just about.
All right, guys, Michael is here, and he's going to give us a recap of everything that happened this morning.
All right, I will do that. For what it's worth, I was going to see if I got that same email, Dwayne, and I didn't. At least I can't find it yet. But
Well, let's talk about it later.
we'll talk about it. All right. Here we go, everyone. Everything all set on your end?
Trying to get it. Yeah, there we go. All right, looks good.
Okay. Here we go. Good afternoon, everyone. Today is Thursday, the 2nd day of October 2025. Now, if you have not taken a free travel lesson, you want to go to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button. When you do, it will bring you to this registration page. Now, that registration page is going to change tomorrow, actually. But all we ask for is your name, your email, your phone number, and down at the bottom, it gives you TradingView login ID. Okay, once you give us that, we'll be able to get your indicators indicating on your desktop. That's what you really want to have happening. Get your indicators indicating on your desktop and get you everything that you need to get into the room with us in the morning. All right? All right, so let's go over here. Now, if you're going to read the spreadsheet, you're going to read all the CFTC risk disclosures down at the bottom. We had a pretty good day today. Didn't start out perfect. We started out with a stop out today. Did we start out with a stop out yesterday too? No, yesterday. And Q44 took. Today we started out with a stop out. That's why it took 9 minutes and 6 trades to get the goal instead of just one. Anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We're 185 ticks on the NQ, 21 on the YM, 70 on gold, and minus 15 on the ES. We never really fully recovered on the ES. I don't think, did we ever get up above 0 on the ES? Nope, we never did. I did have one screw up on the ES too. That was a minus 8. Should have been a plus 4, so it had been overall minus 12. But anyway, that put us at plus 1542.5 on the morning session. And today it took 9 minutes and 6 trades to get to the goal for the day. At that point, we're up $2,850 with 10 contracts on. We took a total of 44 trades. So on the month now, we're up $2,610. That's over 2 business days, averaging $1,305 per contract per 2-hour business day. Now, on the year. Go to the year now. On the year, we're $204,527. That's over 170 business days, averaging $1,203 per contract per 2-hour business day on the year. All right. So what I'm trying to do is to keep this over 1,200 the rest of the year. That would be great if I could do that. But we do have a good solid 2.5 months left, almost 3 months. Throw in the holidays. I think we have, what do we have for holidays between now and then? We have this month, nothing. We used to have one this month. It used to be like Columbus Day or something like that this month. And next month we have Thanksgiving, and the month after that we have Christmas and New Year's. Christmas this year is on a Thursday. And Thanksgiving obviously is on a Thursday. Interesting. All right, so that's what we got left. Following the 24/20 blueprint, if you were to quit trading when you get the goal for the day, and now you'd be at 10 contracts. Being 1 contract per month, you'd be at 10 contracts now. You would have my train of thought was just completely lost. You would have gotten the goal for the day quickly. You would have only had to work 23.35 hours so far this year. You would be up $143,007 if you did everything exactly like I did. You'd be averaging $6,166 per hour for those 23.35 hours. Okay. Okay. Now let's go back here. And now look at the trades. The majority of the trades today, we had quite a few of them on the gold. Gold and the NQ had the most. So we're just going to start with the stuff on gold and gold cross. Right. Now, I think I showed you guys yesterday why we get that. What that suggests is that the NQ is going to start to drop from where it is. That's what it suggests. Okay. For anybody that ever sees that pop up on my screen, that suggests that the NQ should start moving down from wherever it is. It should start moving downward. If we go out here, I just kind of want to go out here and look at this for a second and see where we are on the day. All right. So my projection, let's look at this. Okay. This was based upon the last movement, and I was looking for it to get down to here to the BB3. We partners meeting a week ago. We talked about this. And I was looking for it to get down to here. It didn't make it down there, but I was saying anytime you get to pull back down to the BBC, I was saying last week, with buying call options, you could also just buy a micro when it pulls down to the BBC like that. And from there, I did a projection, copy of the projection that it had already done. And that would put us up here is the 50% advancement from the last projection. And full 100% would be all the way up here, right? Now, this is not a Fibonacci projection. You have Fibonacci extensions that you can do. This is not the same as that. I'm not exactly sure even how to Fibonacci trend-based Fib extension. I think you need 3 points for this, right? 1. Yeah. How do you do that? Yeah, you need 3 points. 2, 3. Is that right? Yeah, that's how you do this. So let me just get rid of that, and I'll try to do it again. Dwayne knows how to do this, but I don't. They need 3 points. So here's 1 point, there's the other point, and there's the other point. So what I drew is pretty much the same as the Fibonacci extension. Hey, look at that. I didn't know that would work out so well. So that is kind of like a Fibonacci extension, what I'm looking at. It's just, I did mine manually. That's where it should extend to. That would be 100% extension of what price is actually done right here. And we hit the 50% mark to the tick. So from there, I would expect a retracement, and I would expect the retracement would come back down to roughly right in here. And then we'll get another push off of that. That should go up to about here, and then a retracement to about here, and then a push off of that. That should do the extra 100%. That's what I would think we would see. So I'll draw this. The pullback down to here, and push back up to there, and the push back down to here, and the push back up to there. That would make sense to me right now. Now, tomorrow morning, we have some high impact news coming out. Supposedly, we have high impact news coming out tomorrow morning. We'll see. With the government shutdown, I'm not sure what's operating, what's not. But we did have news come out today, right? The government shutdown. We had the news come out today, so tomorrow morning will come out too. I expect. Let me take a picture of this little piece of information right here, and we can come back and revisit this maybe in a week. And today's date is 10. Oops. 2. Okay. That's what I'm thinking. So we'll see what happens with that. Now, I'll take more peek at this. That's all good stuff there too. That little guy's starting to move. I really want to see him move a lot higher than that. 100 times. Be nice. Okay, on the ES and up close here on the ES is going to be a long trade. Now, I know I didn't go into any of the trades that I took yet, but I just happened to see that there is a potential trade right here on the ES if we get an up close. There was one that just triggered over here on gold a minute ago too. Let's go through the actual trades right now. Okay. Sorry, I'm getting all scrolled up here. Oops. So control and back and go back to the beginning here on the gold. All right. Here we go. The ES triggered, by the way. Okay, so on the gold, let's start out at the very beginning on the gold. Our first trade on the gold, first trade was a break even, and then our very next trade we picked up 25 ticks. Trade after that we picked up one that goes to 26. Then we had where's the stop out? There it is. Okay, we went from 25 to 26, and then we had some gain there that I don't have, and then we stopped out. The stop out was a mistake. I shouldn't have taken that trade, and we went down to 11, but I know we were higher than 11. Then from there to 17, and then went from 17 to 27, and then I screwed this up again. We went from 27 to 17 somewhere, and then we went from 17 to 20, and then 20 to 30, and oops, hang on. Let's find it. From 20 to 30, and then 30 to 55. I think it was 30 to 55, and 55 to 65, and then our last trade was over here. We had a break even there. We had 5 ticks there, got us up to 17, then we had a break even there. I think that was our last trade. Was it? Nope, we hadn't. That was our last trade. I think I should do it backwards. Okay, we had 5 there. That was from 70. We're at 70, then minus 5. We had a break even. That brought us down to 65. Then we had a 10 tick trade there, down to 55. Then we had a 25 tick trade there, down to 30. Then we had a 10 tick trade there, down to 20. Then we had a 3 tick to 17. Somehow something happened in here. I didn't count that one, but I did count that one. Stop out. Okay, the stop out going backwards. It doesn't make sense. Anyway, I didn't count at least one of the gains, and I did count every stop out. So we ended up with 70 ticks on the gold. Let's just see here. I screwed it up yesterday too. I don't know what happened to me today, the last couple of days. Let's go into the break. Now, in the break, this was not a trade. This was not a trade. This was not a trade. This was a trade. You could have taken a trade right there on the gold. That was a trade right there. That would have eventually worked out. We've been very close to stopping out, but eventually worked out. You get into the long side. That was a trade there. That was a trade there. Come all the way over here, and nothing. And all the way over here, and that was a trade. And nothing there. Nothing there. Oops. This was a trade that would have stopped out. That's the only one that would have stopped. Look at all this action we have. And this is gold. There was so much movement in gold today. That was not a trade. That was a trade. That was a trade. That was not. That was not. That was not. That was not. That was. So all those right there would have been at least break-even trades. That one included. Now all these trades are going like 10 ticks before they pull back. It's a 9-tick range. This was a trade right here. Now that would have stopped you out to the tick, I think, right there. This was a trade right here that would have gapped up for you. That was a trade right there. That would have been a good one. And that ES trade, I totally forgot to put that ES trade on. Here it is right here. I'm going to go to break even on that and lock in 4, lock in 8 on that ES trade. I'll show you that again in a second. This was not a trade from right here, guys, because it didn't come out. They were sold right here. So the gold was really, really active today, and we were up 70 ticks with it. Now the ES trade was this one right here. Okay. It was right in there, and I have profit locked in on that right now. Okay, on the YM. The YM was the next one. We only stopped out. We stopped out once or twice on the gold. It's like twice we stopped out on the gold. And on the YM, we stopped out twice on the YM. Let's go back to the beginning. I missed a bunch of really nice trades on the YM today. The first one I picked up was right here. We got 5 ticks on that. Then 2 more to get to 7. Then 10 more to get to 17. What the heck was wrong with me today? To get to 17. And then I stopped out somehow and I went down to 10. But I don't know where that is. And I must have messed something up to go down to 10. I missed a trade right here. That was a nice long trade. I went from 10 up to 33, so I had a 23 tick trade there, and a 3 tick trade to get me to 36, and then something there that I didn't write down, and I stopped out there that brought me down to 21. So I'm missing the first stop out in here. But I accounted for it in my numbers, but I didn't get it there. And I did get this one, but I didn't account for all the gains. What's wrong? And a break even there. Oops. And let's see. So it's the gains that I keep missing to put down. I keep trying. I think what I'm doing when I'm doing this, I keep saying, okay, well, that was a win. I'll get back to that. And then I never do. Anyway, during the break, let's see. During the break, we had, I'm going through this right here. All this stuff here, there was no trade. No trade. That, right? Nope, that's not it. That was not a trade. This was a trade right here. That would have just barely stopped you out if it did, but you probably would have gotten your profit right over here. I don't think it would have stopped you out. I don't think it pulled back 10 ticks. Like 8, it looks like. All through here, no trades. All through here, no trades. And right here, nope, no trade there either. So on the YM, we ended up with 21 ticks. Our last trade that made a difference was right here, the stop up. And right now, there is no trade right now on the YM. Okay, and now the ES. On the ES was our nemesis today. That's where we ended up negative. And I don't know what I did on that trade right there. I should have been +4, and I ended up -8. That's just off this one. Right, so on this one, our very first trade, I probably shouldn't have even done that. It doesn't look like it was, it's right there at the midpoint. But I did that and I stopped out. So we're -10 on that one. Then on the next one, I picked up 4 ticks. We're at -6. Then we picked up 6 ticks, put us at 0. Didn't it? No, I'm sorry. We picked up 1 tick, put us at -5. Then we stopped out again, put us at -15. Then I messed that trade up. See how the trade was right here. It was a short right there. I thought I was at +4 ticks, and somehow I screwed that up and ended up -8 ticks. And that brought me down to -23. And then I picked up 8 ticks there to get me to -15 again. And that was it for the morning session. Now, during the break, is that a trade? That was a trade right there during the break. That would have been a stop out, I think. I don't think it would have enough to get the stop break. That would have been a trade right there. Could have been some profit. That would have been a trade right there for break even. This trade right here that I took a few minutes ago, that wherever I locked it on profit, I just got. And that was it. And that was it for the ES today. All right, now the NQ. Let's do the control back thing on the NQ. Okay. Oops. Here we go. Control back thing here. There we go. So right here, our first trade on the NQ, so we picked up 27 ticks on the first one. Break even, break even, break even. 4 ticks to get us to 31. Then 8 ticks to get us to 39. Then 4 ticks to get us to 43. Then 45 ticks. These 45 ticks to get us up to 67 and to 75. Then break even, then 75 to 116. then 116 to 124, then 124 to 132, 130 break even, then 132 to 136, then 136 to 140, break even, then 140 to 185, and that was it. I think, well, we might have had another trade in there, but I think that was it. That was it. So we ended up with 185 after this last 45 tick trade here on the NQ. Now, during the break, we'll start right here at 11:30. This was a trade. This was a trade. This was a trade. All three of those were good trades. This was a trade. This was a trade. All of those would have been at least break even, right? Nothing would have stopped out yet. This one right here would have been your first stop. Right there. That would have been a stop out. That was a trade right there. Okay, that was a trade. I think it would have gone break even. This was a trade. This was a trade. That would have been a really nice one right there. This was not a trade. It didn't make it into the overbought from the last one. And brings you all the way over here. And this was a trade right here. And that was it. So we ended up with plus 185 on the NQ this morning. Okay, lots of trading these last couple of days, guys. There's been a ton of trades. 46, 44. I think the last week. You know, as we, I don't even know why it's been so volatile in the last week, but you know, you can see it in the results. We have volatility, we have lots of trades, we have lots of trades, we have lots of success. All right. So if you're just logging on with YouTube and you haven't taken a free trial, go here to mytradingiq.com, click on the purple button, no credit card required. No credit card required. Click on that. It's going to bring you to the registration page. Just fill it out. Once you fill it out, make sure you have StreamView login ID down here at the bottom. Once you fill it out, you'll be sent everything you need to get into the room and get your indicators indicating on your desktop. Okay. All right. So over here on gold, we just need to hit the midpoint and have a down close. We'll have a trade there. Midpoint and a down close, and we'll have a trade. And we're not there yet. Let's see, it didn't hit the midpoint there, but you can, if it pulls back before it goes 5 ticks into profit, too late. It didn't do it. It didn't really hit the midpoint. It was 1 tick away from it. See, on trades like that, if it doesn't go 5 ticks into profit and it pulls back, say 5 ticks or something like that, I'll try to get it on the pullback. So my stop will be up here above the prior swing high, and not the prior swing high, but above the midpoint. And then I'll still be able to enjoy the trade if it advances, which it usually will do. Okay. I feel like 1,000 things. Can't remember any. We did not make it into the oversold. And on the YM, okay, on the NQ, we did not make it into the oversold. We need to get in the oversold. So down close on this bar and up close on the next one. It's not going to actually do it. A down close and an up close will put you below the midpoint. We need this to go up more and then give a down close. Okay, the S needs a down close followed by an up close. And do you understand what I meant about this here on the NQ? It's got to go up a little bit further and then give a down close. Because right now it's right at the midpoint. If it gives a down close and the next bar opens, the next bar is going to be 1 tick away from the midpoint. So this has got to go up higher and then give it the down close. And then the next one can go straight up. You see, that's not going to make it. That's not going to do. It got us into the oversold, but it's not going to be a trade. Now, the way the ES is coming together, this is easy and obvious on the ES. We need a down close that's going to put us a little bit below the midpoint, and then an up close on the next one, put us above the midpoint. Beauty of range hours. Okay. So this is what we're looking for. We want the down close, followed by the up close. So we wait. Does anybody have any questions about anything in here? Anything that we've done? Anything I've gone over yet? Way to go through it if you do. All right, so we did not end up with a trade on any of that, but we're still set up. We could have a trade coming up here. Could be a trade coming up here. Okay. All right, well, we're just waiting. While we wait, let's go look out here again. Okay. We'll see tomorrow. In the pre-market tomorrow. You guys probably already went over all this, but in the pre-market tomorrow, this is what we have coming out. We have the non-farm payrolls, which is a huge high impact. Average hourly earnings, unemployment rate, and the average hourly earnings year over year. And then at 10 o'clock, we have ISM services PMI. Now, this is listed as medium impact with a question mark saying tentative, and this is also the same thing. It's odd that they have a high impact showing tentative. these guys, we'll have to see what kind of revisions they have. This is what Dwayne and I were talking about yesterday. This was revised from 54,000 to minus 3,000. They can't do any better than that. That's just way off. So who knows what they're going to have tomorrow. And again, like I always say, just trade what's in front of you. It doesn't really matter what they say. If prices are going up, background's green, you're looking to buy. If prices are going down and the background's red, you're looking to sell. That's all that really matters. All that really matters with that stuff. And now we need this to get down, hit the midpoint, and bounce. Same thing over here. We're in the oversold on these two. We need to hit the midpoint and bounce. Okay. If they close up, it's going to reset the midpoint. This, Joseph, I don't know if you're in here. Joseph was asking about this morning. He's not in here. But if they pull out of the oversold, it resets the midpoint. Okay, because right now the midpoint goes from when it came out of the oversold with the green background, goes from when it came out of the oversold to when it goes back in the oversold with the red background. It goes from with red background. We don't have that much red background to show you, but it goes from where it came out of the overbought to where it goes back into the overbought. Okay. We came out of the oversold right there, reset the midpoint. Probably going to come out of the oversold here. On an up close, we'll come out of the oversold here and we'll reset the midpoint here too. Okay. Now it resets the midpoint because it resets the bottom when it comes out of the oversold. All right. That wasn't off the midpoint. If that was off the midpoint, we would have had a trade there. But again, if the background's green, you're looking for longs. If the background's red, you're looking for shorts. Who was it that asked me to do that? It was one of you guys asked me to do that. It's a good idea. And the thing that's good about this is you can see it. Before the bar closes, you can see ahead of time when this is going to flip and change. Because if price touches that yellow at all, it's going to change. So you know ahead of time when that's going to change. Kind of like that. All right. So. All right, looking for the up close now on the NQ. All right, we only have about 45 seconds left, but we can still do this. Looking for the up close on the NQ, 5 points from the bottom. Where's the bottom? 87.50. So 92.50 is what we're looking for. The NQ is the only thing we're going to have a chance with, really here. And now I believe that bottom has just gone a little lower. 87, no, it's still in the same place. 92.50 would be the spot. Let's see if it happens. Doesn't look like it's gonna, guys. I don't think we're gonna get a trade on that. So I will cancel the order that I had waiting out there. And we're not. All right. Well, it is time anyway. So if you have not taken a free trial, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button. When you do this registration page, just fill it out. Okay, once you fill that out, make sure it gives you TradingView login ID down here at the very bottom. Gives you TradingView login ID on there. Okay. Now, if you've not taken a free trial, I already said that. The recap of today, we ended up with 1,542 per contract this morning. All right, and that's it. All right. So with that, I guess I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. So he is ready.
Yep.
He is. Excellent. There's one set up on the ES right now.
Recap of the morning session.
Today it took 9 minutes and 6 trades to get to 28.50 with 10 contracts. 285.
Great job.
Thank you. Thank you very much.
Okay, guys, we made it through each and every one of the markets in granular fashion, and on the daily chart of the S&P, we've still got that doji. On a day when yesterday the government shut down, we got a new all-time historic intraday high and a closing high. And on day 2 of the shutdown, we get another all-time historic intraday high. Now, if we were to close right here, right now, we'd also have a new closing high. But there's still a few hours left before the market closes. So if you're scratching your head going, hey, this don't seem right, you would be right. It don't seem right. But you got to trade whatever's in front of you, because that's all you got. So whether you think it's right or wrong or whatever, it is what it is. And that is definitely a new all-time historic high. 67.82 and a quarter. This is off over here by 1 point. So to become a member, email Valerie, support@cfrn.net. Let her know you want to become a member. She will then send you all the information you need to get signed up. Once you take care of that, then she'll send you all the information you need to get started. I suggest you create a folder in your email client, because some of the emails that Valerie sends you, you won't even know what they are or what they mean. That's okay. You're going to need them as your learning journey progresses. So just put everything in that folder. So if it's the middle of the night or a weekend and you're trying to find something that you've heard us talk about, well, you know to go look in that folder. Once you become a passport holder, you'll get 2 hours of live training every trading day. It's an interactive environment. You also have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle, just like I showed you on every one of the markets today. And in case you missed the news, the CME is now going to facilitate trading of Bitcoin. True story. As a passport holder, you'll get the Logic 247 alerts around the clock. Remember, they're designed to help you learn how to read a chart. You'll get the concierge trade alerts, which are published typically 5 minutes each evening before the Globex Open. And you'll be able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. Plus, you get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for today. In step with the spirit. Galatians 5:25. The Bible says, since we live by the Spirit, let us keep in step with the Spirit. Problems arise when you try to understand spiritual things with your natural mind. Comparing spiritual things to natural things makes the things of God seem foolish. 1 Corinthians 2:14. Paul says, the Spirit searches all things, even the deep things of God. 1 Corinthians 2:10. And he reveals them to us in different ways. Author John Walker says, becoming one with Jesus means developing spiritual discernment and accepting the sometimes seemingly illogical things that come from the Spirit. God speaks to us in various ways. Here are 3 things to watch for. Number 1, stop signs. These are red flags warning you not to go somewhere. A dog I once owned helped me to understand this. He was used to being on a leash, and when I'd take him to a neighbor's field to run, I'd simply say no when he approached somewhere he shouldn't go. The dog hadn't done anything wrong, and my warning wasn't a rebuke. It was a caution for his own protection. So number 1 is stop signs. Number 2 is nudges. A spirit nudge can alert you to impending danger. A Holy Ghost flare to guard your heart. Once a friend of mine was driving towards a green light when he felt strongly prompted to hit his brakes. So he did, just as a semi ran a red light. If it hadn't been for his instant obedience, he'd have been killed. And number 3, shushes. You ever shushed somebody? When we're in conversation, God often warns us when we step too close to a sinful topic, an unfair comment or gossip. And when God shushes you, stop talking. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.